This is Today Television. I'm Sakshi Batra. This is Market Today, and we'll share with you everything that you need to know about this fresh and new trading session that also marks the beginning of the October FNO series after a forgettable September. This is also when you will get to see a lot of action because there's a lot of moving parts that we need to focus on. Remember, we'll start off with what has happened on the Nifty, and of course, we'll also tell you the trading setup as far as the overnight cues in the US and Asian markets are concerned, and we'll focus a lot on the stocks that are in news and focus as well, and how some of those aspects can be seen today with the top market experts joining in. So the Nifty 50 index that gave up most of the 1,000 point rally it had witnessed during the first half of the series is something that has led to September being a forgettable one. Now, after negative returns in the last two series already, the Nifty ended the September series just with gains of 110 points. Historically, when we look at the October series, it's actually been a mixed bag for the Nifty. 2024 was an outlier when the index had actually corrected about 2,000 points, following a record high of 26,277 last year, September 27. And the index has not retested those levels since then. It's already been a year. Now, today is also one very important trading session of the week because it enters a new month. It enters a new FNO series and a new quarter, and that's on the back of the longest losing streak in nearly 8 months as well. Now, of course, today also all eyes will be on the first half of the session, will be on the RBI Governor Sanjay Malhotra as the policy statement for the RBI's monetary policy will come at 10 a.m. And of course, that will keep everybody glued on to finding out what is the road ahead that will keep banks, NBFCs, autos, and even real estate, all those interest rate sensitive sectors in the spotlight. It could also impact the market sentiments as well. Now, RBI Governor Sanjay Malhotra will be announcing the outcome at 10 a.m. Like I mentioned in the last meeting, the MPC had kept the repo rate steady at 5.5% after 3 consecutive cuts earlier in 2025. Now, which had reduced it from 6.5% to now 5.5%. The inflation forecast was lowered, and the committee had retained its simple stance. Now, most of the experts still believe that this time there could be a status quo, but we'll see how it pans out. Speaking of auto stocks, the companies will also begin to report their sales figures for September and the quarter today, which will be a litmus test of sorts for this sector after a record run in these stocks since the GST reforms were announced on Independence Day. Now, at the end of the quarter, it also means business updates trickling in. We already have some business updates from Hoodco already inaugurating the list of the companies doing so. And we also have IRIDA talking about the business updates. Those stocks will be in focus. Overnight, Wall Street's 3 major indices, they managed to close the choppy session higher, even as investors brace for US government shutdown, which could delay key economic reports and the muddy AF and Federal Reserve's interest rate policy outlook as well. Now, what we're also given to understand that Asian markets also opened on a mixed note, and the GIFT Nifty is again indicating to a mild start. Let's actually welcome our guest on board. We're now joined by Mr. Gaurang Shah, the Senior Vice President at Jyoti Investments, to give a sense of how to look at the markets with all of these moving parts. Warm welcome to you, sir. Good morning. Help us understand how are you looking at the markets at this brink of a fresh and new FNO series, a new month, and a new quarter as well.
Thank you so much, Sakshi, for having me on the show this morning. First of all, greetings and well wishes for Dashera to you, to your entire team, and all the viewers of BTTV.
Thank you.
Along with all the things that you mentioned, I think one more thing which I believe is going to come out most probably today from the government side is the EU FTA. I was reading a report yesterday or day before wherein there is a most likely possibility of this particular EU FTA being signed and announced today. So I think that will be positive. I am of a different opinion as far as rate cut is concerned. I think the large part of the market believes that there's going to be a status quo. I somehow have a feeling that there might be a 25 basis cut announced. This is just a wild expectation from my side. I could be totally wrong over there. But I think more importantly, what all of us are going to look forward is the statement from the RBI governor on the economy and of course on the international front of whatever has unfolded. If we get a rate cut, I think it's going to be a pleasant surprise. On the markets, I think being the first day of the new October series FNO expiry, and of course tomorrow we have a holiday, truncated week. We get back to work on Friday again. My sense is that there should be some amount of positivity Of course, choppiness and volatility will be the order of the day. But stock specific and sector specific, there will be a lot to look forward to. Uh, don't expect too much in the current scenario because there are a lot of range bound triggers which will keep the market in a very tight range. So if I have to give you a range, I think if we give a close below 24,600, then we should be prepared for 24,400, 24,300. If we are able to stay above that or float above that 24,600 mark, then I think 24,600 to 24,700, 24,725. So that's the broad 100, 125 points range the market will be trading at. But like I mentioned, it's all going to be stock specific and sector specific depending upon the news flow. Subdued opening is what I expect today.
Subdued opening is what you expect, and a range that has been shared. Well, we reciprocate, Gaurangji, your wishes for Business Today television, on Navratri and for Dussehra as well. We hope that you and your loved ones have a fantastic festive season ahead, and the investors at large also benefit from a recovery in the markets too. We've been talking so much. All this large part of this year has actually gone on to just understand what Donald Trump's policies have been regarding tariffs and how it's going to go forward from here. Again, today, 1st of October, we are looking at the tariffs on pharma to come into effect and how that's going to be impacting again. Last 1 week, we've been looking at pharma coming onto their radar, films coming onto their radar. IT had always been on their radar as well. So we are looking at newer segments that are coming afresh onto their radar where they want to just put, fresh 100% kind of tariffs. How are you looking at these kind of new tariffs that are being announced? And that's creating again a lot of confusion among sectors.
Sakshi, this is the order of the day, and we spoke last time also. I think more of tantrums are going to come across from the Trump administration as far as tariff is concerned. I mean, putting tariff on any movie that comes into US from across the borders is something that surprised. I don't know. I don't think he's a Bollywood fan, to be very honest. But having said that, I think. Look, I mean, whatever he said, I don't think is going to have a large, even in pharma that you mentioned. Look, what happens eventually is that is what, the House of Congress was questioning different senators of Trump administration that who is eventually going to pay the tariff. None of them had the guts to say frankly and openly, even though it is a hard fact which is hitting on your face, that it is going to be the citizens of the America. No one else is going to bear the load of that. So what is going to happen eventually is that the cost of healthcare, cost of hospitalization, cost of consultancy, and overall healthcare cost is going to go up. Who's going to pay a price for that? Actually, the citizens of America. So my sense, Sakshi, is that all this thing would possibly impact from an immediate short to medium term point of view. Absolutely no denying about that. But from a longer term perspective, we are positive on pharma. The fact remains, Sakshi, that pharma was India was the pharmacy to the world. It was, yes. It is, and it will always remain. There is no possibility of in the next 5 years or 10 years, the kind of capability and capacity that we have, Sakshi, can come up in another country. And moving your manufacturing facility to the US, okay, fine. Whoever is there from India in terms of pharma manufacturing company is good. But who is going to move out afresh at current time with the cost involved, with the labor cost involved, with the land cost involved, with the rules and regulations of the United States of... I mean, you cannot set up a pharma manufacturing facility afresh in a matter of 2 years or 3 years. And by the time 3 years are gone by or 3.5 years are gone by, this guy is going to go away. He's not going to be in the White House. So my sense is that we'll just wait out. Pharma overall be a positive. Cipla, Sun Pharma, Natco Pharma, Aurobindo, Gland Pharma. Hospitals we are positive. Apollo, Fortis Healthcare, Max Healthcare. Diagnostics we are positive. Dr. Lal Path Labs. So this is the entire universe of pharma. It's not only manufacturing companies. It is also manufacturing companies, hospitals, and diagnostic centers.
Right. So far the understanding was, Gaurangji, that only Sun Pharma is going to face some of the impact because that's only into the branded and the patented segment. Large part of exports from India, at least 90% of exports on pharma go into the generics market. So far, the generics market, like you also pointed out, is has not been touched. And if that segment is touched, it will be the US government, the US citizens themselves that will be impacted, like you've already pointed out. And that will be a self goal in some matter, which Donald Trump should not be really looking at this stage. But so far, it's only limited to Sun Pharma as a reaction that we've been seeing, rest of the other sectors. But look at Pfizer today, 7% of an uptick because they've got a 3 years exemption from tariffs, and also they've discussed with the US company I'm talking about, the Pfizer Inc. Remember, so that's some sentiment trickling in there as well. So that's the pharma space that we've discussed. Let's also talk about the auto space at large. Gaurangji, again, that will be in focus today because we're going to be seeing the auto sales numbers. We're talking about how, this could clearly be the litmus test. We'll get to see how much of sales really came through after the GST cuts came in, because these stocks had run up 10, 20, 30% in the run up to the announcement and the final implementation of GST rollout. But finally, we'll get to see the numbers and how they reflect the sentiments. On the auto space, what's your sense, sir, and how are you approaching it?
So, remain absolutely positive, Sakshi. I don't think there is any reason to give out or give into the run up that we've seen and the correction after that, and again a run up.
Yeah.
If you look at the new launches, there are lots of new launches lined up. Tata Motor, I believe, would be the leading one, given the kind of new launches as well as launches in new avatar of the existing models. The Tata Sierra used to be one car. Tata Estate used to be another car. Of course, Tata Estate is no more there, but Tata Sierra is going to be relaunched in a new avatar with new features. So that's positive. So not only auto manufacturing companies, Sakshi, I think auto ancillary and tire battery manufacturing companies should also be on your radar. Export market, my understanding is, and I hope I'm right, is going to be a big, big opportunity. Despite of the headwinds that the auto sector is facing or likely to face in terms of tariff, etc., I don't think that's going to be a big, big concern. Overall, my sense is that two-wheeler, and more importantly, I think, I mentioned last time we were discussing about this GST 2.0.
Yes.
So October starting today, November, December, and thereafter in the new year and for a prolonged period of time, I think contribution from auto sector is going to be at an elevated level. Cost is coming down. Cost rationalization is helping profit margins to expand. Net profit is also growing up. Only one particular stock in the entire auto pack that remains a little bit of short to medium term concern is Tata Motor, because of what happened in GLR. And then, of course, I heard yesterday or day before yesterday that they've secured a line of credit from UK, some £2 billion, if I'm not mistaken. I stand to be corrected if I'm wrong. So overall, remain extremely positive on auto ancillary companies, tire and battery manufacturing.
Okay, fair point. So that's the auto space at large that we have just managed to discuss. Remember, the numbers will start trickling in and we'll focus on that, of course, throughout the course of the day as well. Apart from this, like you pointed out, there is some sense that you believe that the RBI may be continuing with its rate cut cycle. What is that going to do to the overall market sentiment and to the rate sensitive sectors beyond autos that we've discussed? Maybe banks, for instance. We've been seeing PSU banks come up, bright and shine again. And, how would you really even look at real estate, for instance, on the back of the rate announcement?
So, Sakshi, I think we have seen some amount of degrowth in terms of registration and sales. So my understanding is that in case if this rate cut has to come through, not only your housing real estate companies are going to do well, but my understanding is that housing finance companies are also likely to do equally well. So we are positive on LIC Housing, Canfin Homes, to name a few. Pure real estate play, if you ask me. We've got about 5 or 6 names, if I'm not mistaken. So we have names like DLF, Godrej Properties, Shobha Limited, Prestige Estates, Oberoi Realty. And all these names that I mentioned, Sakshi, if you actually go to see, their debt on the balance sheet is virtually at a most lowest level or virtually not there at all. Their execution run rate is very good. Most of these companies have been able to totally sold out their projects or sell out their projects in a record period of time. And these are not small size tickets, Sakshi. These are all big size ticket projects that they have launched. So intermediate, short to medium term, there is a little bit of overhang, but overall remain positive. Not only on the fallback of rate cut, but also from the demand that is likely to come.
Okay, let's also focus a little bit on the quarterly business updates that we've got, at least from the financiers at large. What we've seen is for Hoodco, that they've announced a business performance for the quarter and the half year that's ended on September 30th. The company has said that against the total loan sanctions of 1,29,952 crores achieved during the fiscal year FY25, it has recorded loan sanctions worth 92,709 crores for the half year ended September 30th. Loans disbursements have stood at 25,838 odd crore rupees again. And what we've seen within this Q2 FY26 disbursements were at 13,026 odd crore rupees as well, representing a 43% growth compared to the disbursements in Q2 of last year as well. So that's one. IRIDA has come out with a business update. The stock has underperformed largely, but the sanctions show loan sanctions have grown 86% to 33,148 crores. The loan disbursements have also jumped by 54% to 15,043 crores. This is in Q2 that we are talking about as well. How are you looking at these stocks, largely from the government aspect? They've been lackluster for some time on the stock price performance, but the business updates show that there has been a promising update.
So, I actually forgot to give a small disclosure, which I normally do at the beginning of
Sure.
the show. Sakshi, please
Sure.
allow me to do that.
Please.
So all recommendations that I'll be sharing this morning on the show with you, Sakshi, is part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give similar advice to our clients. They might have their interest in the recommendations that are given across. So amongst the financiers or stroke project financiers companies, I think one company that we are positive is IRDA, I beg your pardon. We've been positive on this for a pretty long period of time, right from the time the IPO was there. I think IPO was at about 26 or 36. I don't really recollect, but somewhere around that level was the IPO. Again, the way things are happening in the entire energy space, new capacities coming up. So I think disbursement for financiers are going to look very, very positive. And along with that, Sakshi, I think the focus in terms of clean and green energy is something that is going to roll out in a big way. It has already started to do wonders at the ground level. But my sense is that from a long-term perspective, not only energy sector, but financiers to the projects like new energy producing capacities coming up should do well. Likewise, IREDA. So positive on IREDA from a long-term point of view.
Okay, positive on IREDA for the long term. Okay, let's actually get you to also talk about some of the other spaces as well, sir, and help us understand how to look at those pockets. We've been also looking at a lot of commodity play, doing very well. Metals have been shining bright. We've seen how copper prices are at a multi-year high, and that's leading to a lot of stocks on the positive move. Of course, precious metals like gold and silver, we've talked so much about it. It's an unstoppable rally, and it's giving more FOMO. You've always advised me as well as our viewers to visit our nearby jewelers all this while, and had all of us listened to you, would have been sitting on a good pot of cash at this point in time. Your thoughts on how are you looking at the commodities, metals and precious metals at large?
So metals remain positive, but my only request to all your viewers of BTTV is that don't look at metals from a 3 months, 6 months, 1 year kind of time horizon. That's purely because of the events which are lined up, Sakshi, or which are going to get lined up, and the news flow that comes in from US, from China, etc. But domestically, if you go to see over the last couple of months and quarters, consumption of ferrous, non-ferrous has gone up. Demand side sustainability is quite good over a longer period of time. Remain positive on Tata Steel, NMDC, Hindustan Zinc, JSW Steel, Hindalco, Vedanta, a few names, but have 2 years plus kind of time horizon if you really want to make meaningful returns from your investment. On the precious metals, despite of the fact that and by the way, Sakshi, gold and silver have been one of the top performers as far as different asset classes are concerned. not
Correct.
only for the last 1 year, but for the last 2 or 3 years. And this year itself, I think gold is up almost about 40 odd percent, 40 plus percent.
Yes, yes.
I'm talking about year to date. Uh, there is a possibility that after getting this kind of a run up, you may have some correction in prices of gold and silver. But
Mm-hmm.
that correction is going to be very, very small compared to what the value, what where they are trading right now. Over a longer period of time, I still believe that if you've not gone and invested in gold or silver, maybe by gold, you have gold sovereign bonds, you have gold ETFs, silver, you have uh, gold and silver. Other ways to invest is via gold and silver mutual funds, or you can buy physical if you have the capability to store it and sleep peacefully at night. But most likely possibility is that over a longer period of time, gold and silver prices. Unfortunately, there is no platinum related product that is available, Sakshi, in India. But platinum also looks quite attractive over a longer period of time.
Since you're talking about gold and silver, sir, let me focus on gold financiers as well. We have also a CLSA report today that we were focusing on. Muthoot Finance, which has given an outperform rating, which has got an outperform rating from CLSA. CLSA has also raised the target price to 3,600 here. Even on Manappuram, they have an outperform rating. They've raised the target price to 310 now. They believe the gold prices that are up 20% on a quarter-on-quarter basis. This is the highest quarterly increase in past several quarters that they've seen. They also believe the loan to value ratios, the LTV, at the end of the June was 62% for Muthoot, 57% for Manappuram, below their long-term averages. And also RBI has allowed lenders to increase their LTV on lower ticket gold loans as well. So a combination of sharp gold price rise, a gradual loan to value increase, and a steady tonnage growth will mean meaningfully increasing of the AUM growth estimates. So they have believed that Muthoot can deliver a 23% AUM growth and a 37% PAT CAGR over FY25 to FY27. And they've upgraded Muthoot's PAT estimates by 10 to 15%. How would you look at these gold financiers, sir?
I am totally of an belief. This is my personal understanding. Okay, and I
Sure.
could be again wrong over there. Okay, let me give you a view on the names that you mentioned. So on Muthoot and Manappuram, our target price were achieved. We have a reduced stroke sell recommendation on both of them. And my logic, I'll explain you my logic, uh, Sakshi. Why are
Sure.
you investing in gold finance companies? Because you are positive on gold. So instead of taking a call of investing in gold via gold finance companies, why don't you invest directly in gold? You will mitigate the corporate risk. So you have gold ETFs. There are almost 12 or 12 plus gold ETFs which are listed on NSE and BSE. If you
Hmm.
don't want to do that, you can buy gold sovereign bonds. If you don't want to do that, you can go towards your gold and silver mutual funds. You can go and buy units over there. When you get into a via mode, then that via mode, that is via, if you want to play gold through gold finance companies, please bear in mind you are bringing in corporate risk. And remember one thing, RBI has been changing its policy as far as gold loan companies are concerned, not one but one
Yes.
too many times. And every time that RBI does that, gold loan companies go for a toss. So we need to bear that in mind. So my humble undertaking is or understanding is that if you want to invest in gold, invest directly in gold. Why do you want to go by a gold loan companies or gold finance companies? Okay, having said that, we are positive on Titan as a matter of fact as a jewelry pay.
Okay, got that. The markets have started to take a positive note. We can look at the markets and how some of the stocks are moving. 24,629 is what we have right at the open. You also have, the Nifty 100 names, the Nifty Bank as well. Flat with a negative bias though for the Nifty Bank, but the small caps and the mid caps are hovering higher. 1/10% uptick for the mid caps. About higher start for the small caps as well. Mild gains there. IT is also with mild gains that you can see on that one. The advances are 1062 to 520 decline. So the market breadth is also indicating towards a positive, indication that we have across the board. Sectoral movers, you have a lot of sectors that are actually inching higher. Metals, realty, oil and gas, IT, FMCG, and even pharma is opening up. But we have PSU banks, capital goods, and defense starting on the back foot, at least for today. Among the top gainers on the Nifty, you have Shriram Finance, Sun Pharma, 2.3% higher, M&M, Bajaj Auto, Dr. Reddy's, HCL Tech, also moving up in trade. When we also look at some of the other stocks, Woodco, like we talked about, it's opening about 2% higher. Irida, we talked about 3.7% higher. Goramji was positive on that front as well. So that's moved up pretty smartly in the first opening tick itself. We have Sun Pharma as a reaction to, the relief that's been given to Pfizer Inc. is leading to some positive uptick across the board on the pharma space. Top laggards on the Nifty, you have Bajaj Finance, Hero MotoCorp, SBI Life, and Eternal among the top losers at this point in time. And let's also look at some of the other stocks within the autos. I think Bajaj Auto is opening up in trade today. Almost 0.8% of a move is what we have on the positive side. Let's also welcome Kiran Jani, who's joining in on the show with us to share with us the technical view on the markets. Good morning to you. Kiran, good to have you with us. Tell me, how do you look at the market opening in today's trading session? It's the first day of the October FNO series and for the quarter and the month as well.
Very good morning, everyone. So overall, if you look at the market, it's been a 8-day market is continuously falling, and historically we have seen after such a big fall in continuous day, we have seen a good amount of rally after that. So historically, after giving a correction within 7-8 days on a larger index, say for example, this time index is already corrected by 3 to 4%. And previously, we have seen after such corrections, within 1 month, the indices is recovering or even market is recovering. So that factual analysis giving us a very good sign at current market price, low risk trades are available. Now coming to the level wise, Nifty has a very good support of 24,500. The starting of the new series of October, monthly expiry, based on monthly expiry, if you look at the options data, 24,500 remain again a very good support because the maximum put writers are holding open interest over there. So at current market price, we are recommending to go long. 24,600 is the current market price to go long. Keep buying or accumulating at dip. The strict stop loss would be 24,400. And during this Diwali time, we are expecting market to recover above 25,000 for sure. So looks very much promising at current market price. One can go long. Now coming to the Bank Nifty is far better than the Nifty. No doubt, all the indices are trading below its short-term moving averages. However, if you look at the Bank Nifty since last 3 days, Bank Nifty is back into the higher top, higher bottom pattern where Nifties keep making new lows because of the pharma and because of the IT. But now overall chart patterns look promising for the Bank Nifty also. Definitely at current market price, one can go long with the strict stop loss of 54,000. If 54,000 is not broken down, then we can expect prices to again reclaim 55,800, 56,000 during this Diwali time. So Bank Nifty also at current market price, one can go long, keep a strict stop loss below 54,000 and for the target of 56,000 for sure.
Okay, fair point, Kiran. Well, we'll come to you for your top choice of stocks as well. Meanwhile, we'll go back to Gaurangji, and the conversation around the Tata Group stocks is again getting back into focus with Tata Capital IPO now coming in soon. Now, we've been seeing how Tata Investment Corporation has been rallying. Even today, I think about 5.5% of a move, 10,889. Huge volumes are being seen on this stock, and the entire group is getting back into flavor. Now, we do know when large conglomerates come out with the IPO, there's obviously a lot of retail investors' interest. But what we've seen with Tata Technologies, for instance, last 2 years has actually led to a lot of disappointment. And therefore, how are you looking at Tata Capital IPO as an investment opportunity for retail investments? And how would you see Tata Group at this point, sir?
So, the team is not yet come out with an IPO note on Tata Capital, so I won't go into specific, but let me say this, I think they did, move their valuation downwards, which actually took the private investors with a shock. And it was not a small, it was a big kind of a downward move in terms of valuation for the IPO. Well, the group undoubtedly, Sakshi, is something that you do not have to put any kind of question mark. Timing could be something that could be very crucial. There are a lot of established players, listed entities when it comes to Tata Capital compared to some of the larger names which are already in business for a pretty long period of time and they have proven their worthy. So one will have to just wait and watch in terms of what the earnings visibility is and how they are going to utilize the funds that they are going to garner via this particular IPO. Possibly I'll be in a position to comment next week. Uh, by the time I believe my research team would be out with a IPO note. But yeah, I mean, don't look at all papers, Sakshi. My humble request to all your viewers and investors is that don't look at all the papers, new papers that is coming into market via IPO, purely from a listing gain point of view. Each business is different, valuation is different, management is different, product and services are different. So you can't be mapping all the IPOs with a single thumb rule.
Absolutely, and LG Electronics also coming in the same space, 7th to 9th October. So they'll be opening simultaneously. This is another big one that all the investors have been looking at after what almost 30 years of presence in the country. LG Electronics, I'm sure that everybody who's been buying consumer electronics for last 10, 15 years, 20 years in their lives, they must have got something from LG Electronics in their homes, and therefore the relatability there. How would you look at this one?
So this is a niche and marquee name again, undoubtedly. Valuation wise, I don't have much of insight in terms of how comfortable people would be. But yeah, I mean, given the kind of focus that Indian government has put in terms of consumption picking up, lowering GST rates, and this is one company which is an internationally renowned name. So this should possibly garner a lot of interest. Again, no specific comments because we don't have an IPO note ready on LG Electronics as well. But the parent is very, very strong internationally, Sakshi. So this should drive some positivity.
Okay, got that. Coming back to you, Kiran, your top choice of stocks, how are you looking at the opportunities that present in the first day of the series? For this series, what are you going to be playing with?
As we discuss about the banks, the banking stocks looks very much promising. If we discuss about the derivative space, then SBI looks promising at current market price. You can look at the overall chart pattern after the breakout of ascending triangle pattern somewhere around 840. The stock price is 875 now. After that breakout, stock made the high of 880, and after that again a consolidation. Now the fresh breakout coming out from that consolidation. So stock prices look very much promising at current market price. You can go long at current market price. Keep a strict stop loss below 850, and we can expect price target above 900 for sure in short time. So SBI looks very much promising. One more stock which we discussed last week only, that is Bank of Baroda. Even Bank of Baroda has given a breakout. We discussed somewhere around 245 to 46 last week only. From that level, now it is trading at 260, a fresh breakout from the consolidation pattern, and this consolidation pattern took almost 1 year. So 1 year consolidation pattern breakout, we are expecting price target of 280 to 90 in upcoming time. The risk reward ratio is also favorable, so one can go long at current market price, keep a strict stop loss below 245, and we can expect price target of 290. So PSU banks looks very much promising at current market price, one can go long. One more large cap stocks only which we are liking, that is the Reliance Industry. Overall chart patterns looks promising. Multiple bullish divergence are available on daily price chart after the corrections from 1500 to 1350 level. Apart from that, stock price has a very good support of 200 is moving average. So a low risk trade available for the Reliance also. At current market price, one can go on Reliance, keep a strict stop loss below 1340, and we can expect price target of 1450, 1460 in upcoming time. So we are preferring on large cap side only. Definitely one can go long.
Okay, coming back to Gaurangji. Gaurangji, your top choice of stocks, in this festive season that you're looking at this point in time, what would you guide investors who are starting off building their portfolios? They usually do it in Navratri as an auspicious occasion. How would you advise? Because today is the last day of Navratri. If anybody is still starting out, how should they devise their portfolios?
Sakshi, look, I am absolutely not in a position to give any short to medium term calls. Yeah, but from a
Sure.
long term point of view, if you're planning to become an investor, after understanding the markets and the risk involved, then my sense is that stick to the basics. Don't do anything extraordinary. Don't try to be a Robin Hood. Don't try to be a khatro ke khiladi. Buy quality, don't buy quantity. This is something that I've always mentioned on your channel. So you have public sector banks. Sakshi has been doing extremely well for the last couple of days.
Yes.
So we have two investment. We have got a couple of them, but two important ones from public sector bank would be the banks which are hitting a new all-time high. That is State Bank of India and Indian Bank. From private sector banks, I think Axis and ICICI and do well. Autos name, I think M&M, and possibly TVS Motors. That is a two-wheeler and a four-wheeler play. Cap goods engineering, I think L&T and a diversified play in terms of Reliance should do well. Defense is something that you should definitely keep your eye on. Along with that, uh, Indian capital markets related stocks. I think
Yes.
if Indian capital markets are going to do well, then strong players which contribute to the growth of the Indian capital markets should also do well.
Okay, fantastic. On that note, thank you so much, Paragji, for being with us on the show today and helping all our viewers out by understanding what's the best way to approach the markets in this space, and of course, how to devise a well-diversified portfolio as well. Wish you all the very best for the upcoming festive season, sir. Thank you so much for being with us. Of course, we'll see you, after the Shera celebrations as well next week, and of course, we'll get more insights from you, and hopefully, the markets will be in a better footing as well.
I too hope so. And once again, greetings for the festivity. Thank you so much.
Thank you so much, Farangji. Continuing our conversation with Kiran, Kiran, how are you looking at the market move specifically? Because, last series has been a completely forgettable one. We've given up all the kind of gains that we started to build up in the first week of September. In the last week, everything was given up completely. Although we've just managed to stall that two series of a losing streak by just gaining about 110 points on the Nifty. But that's just minor. And most of the experts I'm speaking to still believe that the markets are going to be again in a very narrow band of a range, and how this could continue like this for some more time to come. It's already tested a lot of investors' patience this entire year, especially for those investors, Kiran, who've entered after the 2020 COVID-led, inflow into the markets. So for them, this is a long-drawn consolidation. They're not getting a chance to see how the markets are going back to the erstwhile highs or maybe newer highs, and therefore a lot of frustration is setting in. What is your advice to such investors?
As I mentioned in the opening commentary only, I would reread this thing. I want to give some interesting data which our research team has made. So
Sure.
five instances we have where market corrected for 7 consecutive days, and the average loss was somewhere around 4.2 or 4%. Now, if you look at current statistic, Nifty mid cap or Nifty small cap has already corrected for last 7 days. Today is the eighth day, and the price corrections, if you look at the price correction, is somewhere around 5.3. So it is near to the average or what history has been showing us. After the 7 days of corrections, generally market recovered. So after that 7 days correction, what percentage kind of market has recovered? Let's discuss that. So say for example, after that 7 days consecutive loss, within 1 month, market is recovered averagely 2%. Within 3 months, market is recovered 5 to 4%, and within 1 year, it is 14%. So data looks very much interesting. We are at Diwali, very much auspicious festival for us. So definitely at current market price, as Gaurang sir also said, go for the quality, not for the quantity. Looks very much interesting at current market price. If you don't understand the stock specific, you can go with the ETF also, or index basis ETF. So at current market price, definitely one can go long on Nifty, Bank Nifty, and the large cap stock for sure. We like Bank Nifty very much. And even you, if I look at current today's Nifty 50 or Nifty small cap or Nifty mid cap price chart, it is recovering from the day's low and it is not breaking a fresh low. Bank Nifty already into the height of higher bottom pattern. Today Nifty and mid cap, at least currently, it is not breaking its previous day low. So today, if markets holding its previous day low, then definitely we can expect a far amount of good rally. If I discuss about the Nifty small cap is trading at 17,000. One can keep a strict stop loss of 17,200 and we can expect a recovery towards 18,000 for sure. So looks very much promising over the chart. As we discuss about the PSU bank, there are other stocks also, like in auto, we are already giving a good rally. So you can look at the auto ancillaries. Mothers and Sumi looks very much promising at current market price. Already there is a big correction has been happened. Now it is taking a support from previous breakout level. So 106 is the current market price. You can go long at current market price. Keep a strict stop loss of 100 rupees, and we can expect 120, 130 kind of a level for sure. So there are plenty of quality stocks are available. Definitely one can have a horizon of the 1 year from here, and you can expect a good amount of rally for sure.
Okay, got that. Kiran, let's also focus on some of the other aspects as well in the markets. Let's talk about the rate sensitive spaces today when the RBI governor announces the rate policy decisions at 10 a.m., autos, banks, even real estate, they will be in focus. How are you looking at the rate sensitives to be tracked today, and what should be the trading strategy there? Large part of expectation is a status quo, but Gaurang could join in, along with you. He mentioned that he has a sense that there could be a 25 basis points cut. How would you look at it?
Yeah, Jainam broking, we are also expecting status quo only. We are not expecting any rate cut.
Hmm.
No, definitely. But the rate sensitive within the sector, we are liking real estate because see, auto has already given a rally, and in auto, definitely the rate sensitivity is there. But because of the GST cut, because of the tax cut, I mean income tax cut, which came earlier in this year, so those things already in play, and it has given a very good amount of rally. So now real estate could be the place where you can keep an eye. There is always a very good support on real estate. As of now, we can see 860 on a reality index. If you check the Nifty reality index, there is a very good support of 860, 850. If those level is not broken down, then you can expect recovery till 920, 930 for sure. So within the real estate, DLF looks promising at current market price. One can go long at current market price. Another stock which we are liking, that overall reality. So one by one, if we discuss about the level wise, DLF forming a bullish engulfing candlestick pattern today. It has a very good support. Previously, we have seen 700 was the steep resistance. Once 700 is broken out somewhere around May 2025, within 1 year, within 2 months, it tested 800 level. So again, the stock price is available over there only. A good risk reward ratio is available. Keep a strict stop loss below 700 and go long on DLF. We can expecting price target of somewhere around 830, 840 in upcoming time. So DLF look promising. The same chart pattern we can see on overall reality. Overall reality is also taking a good support of 1600, 1580. If those prices also not taken out, then we can expect prices to retest it somewhere around 1700 or maybe 1750 in upcoming time. So apart from auto, the rate sensitivity or the depending on the RBI and the festival season are coming, we are expecting real estate to outperform.
Okay, fair point. We'll definitely look at that as well. Let me also focus on some capitalization based discussion as well. Kiran, this year when we had started off in 2025, a large part of consensus was to stay with the large caps because this is going to be a volatile year and the large caps are going to be better performing than the mid and the small caps. That's largely how it has played out. Mid and small caps have underperformed. But what's your sense from now on? Is there any sign of a pickup there in the mid and the small caps as well? Or would you still stick to the large caps? What would your advice be?
See, overall chart patterns are very much into the consolidation phase only. So large cap give us the confidence that it is trading at the support, nearly support. So if those supports are not taken out, or maybe if anything goes wrong because of the international cues are not in favor of India, so there are always a chance of a flash crash or something. So in that point of view, large cap look very much promising. But within mid cap space, there are so many quality stocks. There are sector which are not affected by such kind of a news. So we have to focus on such sector for sure. So say for example, you can go for the banking. So anywhere there is a tariff news or something will happen, the banking stock are not that much affected. So keep away about from the IT and pharma for sure, and focus on the country favorable stocks like FMCG, like auto ancillaries, or you can also look at for the hospital kind of a stocks like Fortis looks very much promising at current market price. It is trading at its all-time high. We can also look around the metal sector also. We discussed about Hindustan Zinc and Hindustan Copper last week. You look at within 1 week what a fantastic rally has been given. So those kind of a sector and those kind of a mid cap and small cap stocks definitely into the radar, and we can expect some good amount of rally.
Okay, let's focus on the auto space as well. We have key updates on the numbers that have already come in. Let's try and understand what will be the strategy on those. Escorts Kubota has recorded strong tractor sales for the month of September. The total sales are up by 47.6% at 18,267 units. Domestic sales are up 48.5%. Exports are up 17.5%. For Q2, when we talk about the entire quarter that's ended September, overall sales are up by 30%, domestic sales are up by 30%, exports are up by 26%. And for the year to date, for FY26, starting April till September, total sales are up by 14%, domestic sales up 12%, and exports are up 50%. So that's for Escorts Kubota. Let's also talk about Bajaj Auto numbers as well. Again, for they have reported a total sales growth of 9% to over 5.1 lakh units. Domestic sales are up 4%, exports are up 18%. Bajaj Auto has seen a total two-wheeler sales of up 8% in Q2 and total commercial vehicle sales up 15%. Now, when we talk about the FY26 year-to-date numbers, again, total sales are up by 4%, domestic sales up 6%, exports up 20%. Two-wheelers just up by 2%, but commercial vehicles 14% higher in the year-to-date basis on FY26. The third number that we have got is SML Isuzu. That has reported a drop in its sales this time. The sale of cargo vehicles has declined by 9% from last year. We've also seen the total sales of vehicles has also declined by 10% year on year. This is for the month of September. Remember, I'm telling you, year to date basis, SML Isuzu sales have increased by 7% and the cargo vehicles is up by 29%. Numbers have come in. Kiran, how would you look at the chart and tell us what's happening? Escorts Kubota from the tractor division, Bajaj Auto, leader of two-wheelers, and of course, SML Isuzu, that's been an outperformer after M&M's acquisition.
See, if we discuss about the auto, there are multiple factors, and within the auto, there are different segments. Like say, for example, two-wheeler space, we already discussed that because of the tax and GST cut, there is a demand phase we are seeing. Apart from that, if we discuss about the passenger vehicle, the moment it's come to the passenger vehicle, it is also giving us a very good rally because of the GST cuts and also domestic consumption theme and everything being placed. We are already having a very good monsoon season also. So Escorts Kubota or maybe Ashok Leyland has a very good time. So at current market price, if you look at the Escorts Kubota, it has a multiple moving average resistance over that, but it is trading above its 200 days moving average and nearly the breakout level, which is a symmetrical triangle pattern. So at current market price, Escorts Kubota looks promising. Definitely one can go long at current market price. Keep a strict stop loss below 33.50 and we can expect price target of somewhere around 4,000 in upcoming time. Apart from that, Ashok Leyland also looks very much promising at current market price. We already discussed this stocks previously also. It has given a very big breakout of the consolidation pattern, which took almost 13 to 14 months. Within that 13 to 14 months, stock price made a all-time high somewhere around 131 and made a low of also 100 rupees. So 30% of price bracket it has spent is 14 months. After that, it is giving a breakout. So from here, we can at least expect 15 to 13% kind of a rally in upcoming time. So the Ashok Leyland keep buying on dips, keep a strict stop loss below 130, and we can expect price target of 180, 190 in upcoming time for sure.
Okay, got that. Thank you so much then, Kiran, for being with us on the show and of course explaining to us all those opportunities that exist in the market. Wish you also, fantastic festive season up ahead as well. Of course, we'll catch up with you next week too to garner all those insights that you have to share once the Dussehra festivities are done and dusted. Thank you so much for being with us. And viewers, we'll wrap it up on that note. The markets are slightly higher, both on the Nifty and the Nifty Bank front. Let's try and find out whether this gain can actually continue throughout the course of the session as well. This is the first day of the October FNO series. A lot will also depend at 10 a.m. when RBI Governor shares his statement of the decision on the repo rate, as well as shares his insights on how is he looking at the economic growth projections for inflation, GDP as well will be important to be tracked and how they move forward amidst all of these global uncertainties. Of course, we'll also be waiting by to see RBI Governor's comments on Rupee, which has been testing newer lows of late, as to what is the decision on that front as well. So keep your focus on RBI policy. We'll of course be decoding that with top economists throughout the course of the session as well. So stay tuned with us on Business Today Television. Today there's a lot more that you need to track with us.
Maharashtra is grappling with severe rainfall. The Met Department has issued red and orange alerts for several districts. Many parts of the state are hit by floods. In Dharashiv,